Hi everyone and welcome to today's morning report on Wednesday the 30th of March with me, Rich Perry, market analyst at Antec Markets. We've had a positive start to European trading and that's come on the back of this speech from Janet Yellen yesterday. She basically has pretty much rebuffed all these hawkish comments from the FOMC members over the last week and come out and said that the Fed remains very cautious actually and sort of still reflects on the lessening growth environment of the global economy, and it's had a big impact on the dollar and also treasury yields as well. We've had the 2-year treasury sharply lower yesterday, and the 10-year treasury yield as well back lower, and we've seen a significant retracement in the dollar once more and under pressure. So really interesting moves that we've seen, and this is sort of affecting across markets, across forex trading, across commodity prices as well. You've seen the gold price strongly higher yesterday, and you've now seen the oil price reacting. Initially, the oil price didn't react yesterday. It actually closed with a negative technical pattern, a head and shoulders top pattern, but it's slightly rebounding. But that head and shoulders top pattern still remains intact until a move above that reaction high at 40.15 that we saw the other day. So we're still in a negative sort of possibility of a negative top pattern and a net possibility of a correction there. And the two oil prices certainly seem to have sort of beginning to take a bit of a consolidation, perhaps even a leg lower. But we're also seeing no real well, I haven't got a live price here on the copper yet, annoyingly. But yesterday, again, copper was lower, so I'll be interested to see if that comes up today. So the outlook generally is pretty positive today with this move, and we're seeing stock markets across Europe strongly higher, 1.3, 1.4% on FTSE, DAX, and CAC. And we're seeing across the forex majors, euro stronger, sterling stronger, yen is stronger, but also the commodity currencies as well, with Aussie and Kiwi are stronger. So we're seeing strong sentiment, and the dollar is under pressure. Now, what have we got to look forward to today? Well, you've got the ADP Employment Report number, but before that, we've got the German HICP, the German inflation data, which is released throughout the morning from the regions, and then you get the countrywide data at 1 o'clock UK time. It's expected to come in at on the HICP at negative 0.1%, so slight improvement, but still in deflation territory. I've drawn in here the downtrend line on the chart, which shows that the continued sort of slide in inflation or disinflation now into deflation, and that is not likely to give the euro too much support today if that is negative 0.1%. We've also got the ADP Employment Change, which is at 115 today, 194,000, so slightly down from last month, but still around that 200,000, and you can still say that's likely to sort of be an indicator for a pretty solid payrolls report on Friday. And at 3:30, we have got the EIA weekly crude oil inventories. Now, last week we had a strong increase, 9.36 million barrels, when it was, I think, 3.5 was the expected. So a strong increase, and that hit the oil price, and the oil price has basically been under pressure ever since. So 3 million is expected again this week. Again, that would be a pretty strong build, but watch out for the how this one moves on the expectations, because it does impact on the oil price. But generally speaking, market sentiment is pretty dollar negative today. But my chart today is the euro yen. Now that is euro yen is a sort of a market sentiment gauge, really, isn't it? Because it's the two safe haven trades, but yen is a massive safe haven trade, lesser extent on the euro, so you'd want to see the euro yen chart pushing higher to improve sentiment, and it's what we've seen actually last few days, really. Positive improvement, and that's following on from this base pattern. I sort of spoke about this last week as the euro yen was testing this key sort of band of support between sort of 125 to 125.60. Those two sort of breakout levels, band of support there, consistently on an intraday basis testing that level. Never really saw a close below it, or close inside it, sorry. The intraday tests inside 125.60 always found the buyers coming back in, and we're now seeing the buyers pushing out towards this next resistance band at 127.30 area. again hit that level yesterday, but just failed to push on, and couldn't quite make the close. But still, it's just consolidating again today. But you've got these momentum indicators which are positive. You've got the RSI pushing out to a sort of 7-8 week high. You've got the MACD lines pushing close towards positive configuration there. That hasn't been seen for since December, really. So that's positive, and also the stochastics as well pushing into positive territory. So it sort of all bodes well, I think, for if you could get a close above the 127.30 level. I think you could get a continued upside recovery in this chart, possibly back towards that downtrend, which today comes in around 29.80 on the upside. So here we go. Here's the hourly chart. You've got this breakout above 126.60. That's become the initial sort of line of support, and 126.60 to 126.75 seems to be a basis of support now. You've got the momentum indicators on the hourly chart positively configured. RSI coming back towards 40, so maybe this is the pullback that you should start to think about getting into, because in the recent weeks, certainly back towards sort of 35.40 has been a buying opportunity on this RSI on the hourly chart. You've seen the MACD lines unwinding to neutral, stochastics unwinding as well, so maybe this is the little correction that you could use as a chance to buy. Sorry, just back on that again. Now the support comes in at 126 as well, and you wouldn't really want to see, I don't think, this one moving below 126 figure, because you've got this sort of band of breakout there, 126.30, but 126 seems to be sort of that reaction low, and I think you wouldn't really want to see below that, because that would also take you below all the moving averages as well on the hourly chart. So I think this one is building for upside pressure on 27.30. 27.45 was the overnight high yesterday, prior to a slight little bit of a retracement, but I think that the retracement is going to be a chance to buy. So I wish you good luck in your trading today, and I will speak to you later. Thank you.